So we have the stock picks for the next week. So here we have we have two long calls. They're not recommendations for the trade. This is just for indication purpose on how. So try to understand how we try to pick up the stock, the reasons behind that. That's more about it. So it's two long and two shorts. Let's begin with the long trades. It's one of them is HCL Technologies. I think they had given out a reasonably good results recently. IT sector as such is a defensive sector. So whenever the market is facing some corrections, usually the IT and the pharmas and FMCGs perform their defensive sectors. So one of the reasons why with Expectancy is giving a reasonable one is to RiskReward. It's a consolidation breakout. Remember, it's a rounding or a cup pattern breakout followed by consolidation, and then we will have a tight stop loss, and we believe that it can break out further. Well, it's a decent enough, not above the moving average, but good. And the ADX, the trend indicator, is indicating that the TMI positiveness is increasing in strength, and the RSI is about 60 rising up. So momentum of the trend is good. That's the reason. Volumes are good enough, and it's a consolidation and it's a defensive sector. It's the fourth or third largest IT companies in India. This number RiskReward is what you're getting here. Have tight stop loss because the market is correcting. So the second long is on TV's lab. So that's pharma sector. Pharma, again, you know, it's a defensive sector which usually performs well when the market is correcting. Here we have a very wide rounding pattern or a cup pattern. The breakout happened with a very wide range, solid bullish candle, followed by some selling pressure that happened last week, and it could probably that market may consolidate sometime and then continue its breakout. The volumes are right obviously because of this week's candle, but there could be an opportunity to buy. This is what I think. It may work out. Have tight stop losses till the middle of that big huge candle which had huge volumes the week before, not this last week. Last week was bearish, so the volumes cannot be counted here, but otherwise this is a very long rounding pattern, a year or 2 years more, 2020 to 24, and it's broken out with solid big candle, and it's likely different by the further breakout. One is to RiskReward can be looked at. Volumes are not cannot be counted because it's some profit booking of a solid breakout the previous week. But yeah, that could be taken as long positions. Now we have the short positions that may potentially work out. One is Nestle. We know that Nestle is one of the fundamentally sound, solid companies, but when the charts are saying sell it. The reason is quite explanatory. It is blocked on the medium of the parallel channel, and then usually it's likely to go to the bottom of the channel before it finds support and then reverses on the upside. So that is what we're trying to catch, and volumes are big reds, big volumes in the bearish zones momentum as per the RSI below the 40, and trend bearishness, TMI has reversed, taken a bend and then trying to move further. So bearishness is increasing, momentum is dipping, candle is absolute bearish, and RiskReward is risk number 1 is to have tight stop loss to the middle of that solid candle. It's 3 weeks of solid breakdown where this happened from the top. Very good corrections and going, and it's likely to take support near the 2050 kind of levels of 2000, and then this is fundamentally good stocks, but when the charts are shorting is that probably it's a short trade. That's the third one, and the fourth one is Ambuja. It's Adani invested company, I believe, but what's wrong here? Yes, it's a consolidation breakdown. Have tight stop losses. If it is breaching and moving above the neckline of that cup pattern, then that's it. Take the stop loss and get out. Otherwise, it's likely to retest the election for June. At least that till there would be almost like 1:2. If you want to trade from there, you can do that. But yeah, volumes are above moving average. Good volumes, red volumes, and momentum is bearish. Trend is rising up with regard to bearishness. Candlestick is bearish. It's a consolidation pattern breakdown, which is a short call. So those are the 4 picks for the next week. Try to understand the reason behind why these trades are taken out, and then that's about it. Happy trading, happy learning, happy investing. Bye bye.